Have you ever noticed that by the time a financial story dominates the news, the biggest players have usually been preparing for it long before everyone else? Institutional investors rarely wait for headlines. They watch subtle market signals, track changes in supply and demand, and study trends that most people never notice. Right now, that's exactly what's happening in the silver market. Welcome back to AgJohn Silver Update. Today, we're looking beyond the daily price chart to examine why China's silver market has become one of the most closely followed indicators in the precious metals world. This isn't about one dramatic announcement or a single trading session. Instead, it's about several independent signals emerging at the same time, and when multiple pieces of evidence begin pointing in the same direction, experienced market participants start paying attention. Before we dive deeper, think about this for a moment. What if the most important story isn't where silver is trading today? What if the real signal is where physical silver is actually moving? Because that's where today's discussion begins. History shows that every major commodity bull market starts quietly. Long before prices make headlines, something changes beneath the surface. Sometimes warehouse inventories begin shrinking. Sometimes industrial demand steadily increases. Sometimes large buyers quietly accumulate physical metal while prices appear relatively calm. And sometimes institutional traders begin adjusting their positions before retail investors even realize anything has changed. Silver has experienced each of these conditions at different times throughout its history. The question today isn't whether silver will definitely surge tomorrow. The real question is whether the market is beginning to display the same characteristics we've seen before major shifts in the past. No one can predict prices with complete certainty. Markets are influenced by countless variables, and surprises are always possible. But what we can do is study reliable data, understand the broader trends, and determine whether the overall environment is becoming more supportive or more challenging for silver over the long term. Let's begin with China. China occupies a unique position in the global silver market. It isn't just one of the world's largest producers of silver, it's also one of the biggest refiners, and more importantly, one of the largest industrial consumers. That combination gives China enormous influence over the physical silver market. What's changed over the last several years is the scale of its consumption. China is no longer simply processing silver for export. It is using increasing amounts of the metal within its own rapidly expanding industries. Think about how much China's economy has evolved. Decades ago, manufacturing focused mainly on consumer goods. Today, the country's priorities have shifted towards sectors that depend heavily on silver. Solar energy, electric vehicles, semiconductors, advanced electronics, artificial intelligence, telecommunications, medical equipment, and modern power infrastructure all require silver because of one simple advantage. It remains the most electrically conductive metal available. While alternatives exist for certain applications, many advanced technologies still rely on silver because replacing it often reduces performance or increases production costs. That makes silver much more than a precious metal. It has become an essential industrial material supporting the technologies shaping the future. This creates an important difference that many investors overlook. Industrial buyers don't purchase silver because they expect the price to rise next week. They buy it because factories need it immediately. Production lines can't simply stop waiting for cheaper metal. As long as demand for finished products remains strong, manufacturers continue purchasing the silver required to keep operations running. That creates a steady form of demand that's very different from speculative investment. One of the clearest examples is the global expansion of renewable energy. Solar panels require silver-based conductive paste to efficiently convert sunlight into electricity. Manufacturers continue improving efficiency and reducing the amount of silver used in each panel, but worldwide installations continue growing at an extraordinary pace. Even if every individual panel requires slightly less silver than before, the total number of new panels being installed each year continues increasing so rapidly that overall silver consumption can still rise. That's the bigger picture many market observers focus on. And solar is only part of the story. China also leads the world in electric vehicle production. Modern EVs contain more silver than traditional gasoline-powered vehicles because of their sophisticated electrical systems, battery controls, sensors, charging technology, and onboard electronics. Add expanding AI data centers, 5G infrastructure, advanced computing, and smart manufacturing, and it's easy to understand why industrial silver demand continues attracting so much attention. While these developments rarely generate daily headlines, together they represent one of the strongest long-term demand trends the silver market has seen in years. As industrial demand continues to grow, professional traders pay attention to something that many retail investors overlook: physical inventories. Price tells you what the market is doing today, but inventory levels often reveal what may be happening behind the scenes. They show whether supply is comfortably meeting demand or whether pressure is slowly building beneath the surface. This is one reason experienced commodity traders spend so much time reviewing warehouse reports. They understand that inventory trends can provide early clues long before they appear in price charts. Recently, China's silver exchanges have attracted increasing attention because available inventories have fallen significantly compared with previous highs. Exact figures naturally fluctuate as metal moves in and out of storage, but the broader direction has been clear enough to catch the attention of precious metals analysts around the world. Now, it's important to stay objective. Lower inventories alone don't guarantee higher prices. Markets are far more complex than that. But when physical stocks continue declining while industrial demand remains strong, it's a signal worth watching rather than ignoring. Think of it like visiting your local supermarket. One week the shelves are completely full. A few weeks later, you notice several sections aren't being replenished as quickly as before. You wouldn't immediately assume there's a nationwide shortage, but you would recognize that something has changed. The logical next step would be asking why. That's exactly how institutional investors approach the silver market. They don't react emotionally, they investigate the reasons behind the changing data. Now let's shift our attention from China to the United States, where another important piece of this story is unfolding. COMEX plays a central role in the global silver market. While most people know it as the exchange where silver futures are traded, it's also one of the primary locations where physical delivery takes place. Because of that, professionals closely monitor what's happening inside its vaults. Not all silver stored there serves the same purpose. Some bars are classified as eligible, meaning they meet exchange standards but belong to private owners. Another category, known as registered silver, consists of metal that has been officially designated for delivery against futures contracts. That registered inventory is especially important because it reflects how much silver is immediately available if delivery demand increases. Over recent months, COMEX inventories have also declined noticeably from earlier highs. Inventory levels naturally rise and fall over time, but when the overall trend continues pointing lower, market participants begin asking important questions. Is physical demand increasing? Is silver being transferred to other regions? Are investors choosing private storage instead of exchange vaults? No single explanation tells the whole story, but together these possibilities deserve attention. What's particularly interesting is that two completely different markets, China and COMEX, are both showing signs that physical silver is becoming an increasingly important focus. That doesn't automatically mean a shortage exists. It doesn't guarantee prices will surge tomorrow. But when separate markets located thousands of miles apart begin displaying similar patterns, experienced traders rarely dismiss the coincidence. Then comes another challenge facing the silver market: supply. Unlike gold, most silver isn't mined from dedicated silver mines. Instead, it is produced as a byproduct while mining copper, lead, zinc, and other industrial metals. That creates an important limitation. Even if silver prices rise sharply, producers can't simply double production overnight because their mining decisions depend largely on demand for entirely different metals. On top of that, developing a new mine is a slow process. Exploration, environmental approvals, financing, engineering, construction, and infrastructure development can take many years before production even begins. So while industrial demand can increase relatively quickly, mine supply usually responds much more slowly. This growing imbalance is one reason analysts continue discussing structural deficits within the silver market. They're not predicting an immediate crisis. They're recognizing that long-term demand appears to be growing faster than new supply can realistically be added. And this is exactly why professional investors never rely on just one indicator. They combine warehouse inventories, industrial consumption, mining trends, manufacturing data, macroeconomic conditions, and futures activity to build a complete picture. Viewed separately, each signal tells only part of the story. But when they all begin reinforcing one another, the overall message becomes much more compelling. Understanding the fundamentals is important, but professional traders know that price alone never tells the complete story. Very often, the biggest market moves begin long before they become obvious on a chart. That's why institutional investors spend so much time studying positioning instead of reacting to headlines. Every week, they analyze reports showing how different groups of market participants are positioned. Commercial hedgers, large investment funds, commodity managers, and institutional traders all leave clues through their activity. These reports don't predict the future, but they often reveal where risk, opportunity, and market sentiment are gradually shifting. Commercial participants are typically businesses directly connected to the physical metals industry. Mining companies, refiners, processors, and bullion institutions often use futures contracts to reduce risk rather than speculate on price. Meanwhile, hedge funds and large money managers are generally more sensitive to momentum, technical trends, interest rates, and changing economic expectations. When physical demand remains strong while speculative positioning stays relatively cautious, markets can become surprisingly responsive to fresh buying interest. That doesn't guarantee a major rally, but it creates an environment where sentiment can change much faster than many investors expect. Think about an airplane preparing for takeoff. Passengers usually notice only the moment the aircraft begins accelerating down the runway. What they don't see are the hundreds of safety checks completed long before the engines reach full power. Financial markets often work the same way. By the time retail investors notice a major trend, institutional preparation has frequently been underway for weeks or even months. Interest rates add another important layer to the story. Silver is unique because it behaves as both an industrial metal and a precious metal. During periods of higher interest rates, investors often favor income-producing assets, which can create pressure on precious metals. But when monetary policy becomes more supportive or expectations begin shifting toward lower rates, silver frequently benefits alongside gold. Unlike gold, however, silver receives additional support from manufacturing demand. Renewable energy projects, electric vehicles, advanced electronics, AI infrastructure, telecommunications, and modern electrical systems continue expanding around the world. Even though manufacturers constantly improve efficiency and reduce the amount of silver used in individual products, total consumption can still increase simply because production volumes keep growing. This creates what many analysts describe as an efficiency paradox. Individual products become more efficient, yet overall demand for the raw material continues rising because far more products are being manufactured. Of course, none of this guarantees future price movements. Markets remain unpredictable, and short-term volatility is simply part of investing. Economic slowdowns, stronger currencies, changing government policies, or unexpected geopolitical events can all influence silver prices along the way. That's why successful investors focus on probabilities rather than certainty. As we step back and look at the broader picture, several trends continue standing out. China's industrial demand remains exceptionally strong. Physical inventories have declined in key markets. Mine supply still faces long development timelines, while technology-driven industries continue requiring significant amounts of silver. Individually, none of these developments provides a complete answer. Together, however, they paint a picture of a market undergoing meaningful structural change. Here at AgJohn Silver Update, our goal isn't to promise unrealistic price targets or sensational predictions. Instead, we focus on understanding the data, separating facts from speculation, and helping you make better informed decisions based on real market fundamentals. The silver market has always rewarded patience more than emotion. Those who remain disciplined, continue learning, and focus on long-term trends often place themselves in a much stronger position than those constantly chasing short-term headlines. As always, this video is intended for educational and informational purposes only and should not be considered financial or investment advice. Always do your own research and consult a qualified financial professional before making any investment decisions. I'd love to hear your thoughts. Do you believe China's growing industrial demand and the ongoing shifts in the physical silver market are signaling something much bigger ahead? Or do you think the market is simply going through another normal cycle? Share your opinion in the comments because I genuinely enjoy reading your insights.